For each item below, indicate whether its amount 1 affects the bank or the book side of a bank reconciliation, whether it's an addition or a subtraction in a bank reconciliation, and 3, whether it requires a journal entry. So this column, reconciliation, this column will show us where in the reconciliation you'll see the item, whether it's on the book side or the bank side. Here will be whether we are going to add or subtract, and then whether we need an entry or not. This is only going to be for book adjustments that need an entry. So if you're adjusting something on the bank side, you do not need a journal entry for that. Okay, so the first one, interest on cash balance. What you want to do at first is figure out where this item is already shown. So who already knows about this? The bank or the books, the company. So interest on cash balance, that will be shown on the bank statement. So the bank already knows about it. So therefore, you will have to make an adjustment on the book side. Interest earned is going to be in addition. And yes, there will be a journal entry required because this is a book adjustment. B, bank service charges. Who already knows about this? The bank. So that means the adjustment will be on the book side of the reconciliation. Bank service charges will be a fee, so you subtract those. Yes, there will be a journal entry because this is a book adjustment. C, minimum balance bank fee. Who already knows about this? The bank. So what side will it be adjusted on? The book side. A fee means it will be subtracted. And since this is a book adjustment, yes, a journal entry will be needed. D, outstanding checks. Who already knows about outstanding checks? Remember, outstanding checks are checks that the company has recorded and written, but they have not cleared the bank yet. So the book side knows about these. The company side knows about these. So we need to adjust that on the bank side. They're checks, so those will decrease the adjusted balance. And no, there will not be a journal entry needed because this is a bank side adjustment. We do not make journal entries for those. E, collection of note by bank. Who already knows about it? The bank. Where does the adjustment take place? On the book side of the reconciliation. Collection of a note means that your balance is increasing. So that's going to be in addition. And yes, there will be a journal entry because you're adjusting the book side. F, NSF checks, non-sufficient funds. Remember, what happens here is that when the company receives a check from a customer, they deposit it into the bank account. When they do that with a deposit slip, they also increase their cash balance on their books because they're showing it as a deposit. Well, then come to find out, the bank finds out that the check was bad. So that means that the company really does not have that money. So the bank deducts that amount back out of the bank balance. The bank finds out about this first. So the bank already knows, and then the company finds out and has to adjust their books. Non-sufficient funds checks decrease the cash balance because they're bad checks. And yes, there will be a journal entry because this is a book adjustment. Okay, and then deposits in transit. These are deposits that the company has recorded but have not hit the bank yet. So the bank doesn't know about them, but the book side does. The books already know, have to adjust the bank side these are deposits, so they will be in addition. And no, there will not be an entry because we only make entries for adjustments to the books. Calculate the adjusted cash balance per the books of XYZ Company given the following information. So this is going to be just a very simple bank reconciliation. We're going to go ahead and set it up with the bank adjustments here and the book adjustments here. Remember, the first thing you do is you start with the balances. So the very first item says balance per bank statement. So that's the bank statement. That means $600. We record that as the very first thing in our bank reconciliation on the bank side. The second item says the balance per cash account book balance is $710. Next, we have deposit in transit. We have to remember where this adjustment is going to take place. So who already knows about this? If it's a deposit in transit, that means that the company has already recorded the deposit, but it hasn't hit the bank yet. So deposit in transit, the books already know about this. So that means we have to adjust the bank. So deposits in transit will be an addition of $200 on the bank adjustment side. Next item says note collected by the bank on behalf of the depositor. So who knows about this already? The bank. Therefore, that means that you have to adjust the books. If it's a note collected, that means money was collected. So that is going to be an addition. So this is a book adjustment. So you add $80 as note collected by bank. The next item says monthly bank charges. So since these show up on the bank statement, bank already knows about them. So you're going to have to adjust the book side. Bank charges are going to be a subtraction. So on the book side, as an adjustment, you subtract $40 bank charges. The last item is outstanding checks. Who already knows about outstanding checks? Remember, these are checks that the company has written and recorded on the books that haven't cleared the bank yet. So the books already know. They're already recorded on the books. But you're going to have to adjust the bank for that. Checks decrease the cash balance, so we're going to have to subtract this. So you subtract $50 in outstanding checks. Okay, so now that we have all of our adjustments listed, we will just do these calculations. So 600 plus 200 is 800 minus 50, so that's $750 as the adjusted bank balance. All right, and then if we look at our books, 710 plus 80 is 790, minus 40 is also $750 as the adjusted book balance. And we know this is correct because we have come to the same adjusted balance. This is another short bank reconciliation example. So it says calculate the adjusted cash balance per the books of ABC Company given the following information. We're going to do the adjusted balance for the bank and the books so we can show that they reconcile. So we'll go ahead and set this up, the bank side and the book side. The first item says the balance per the bank statement is $10,005. So on the bank side, we will put that as our beginning entry, $10,005. Says the balance per cash on the books is $9,500. The next item is deposit in transit. These are already recorded on the books by the company, so you have to adjust the bank balance. Deposits are an increase, so you'll add $300 as a deposit in transit. The next item says interest earned on the depositor's balance. So this is something that you would see on the bank statement. So the bank already knows about this. Bank already knows. So you have to adjust books. This is interest earned. So it's going to be in addition. So on the book side, you'll add $55 interest earned. Next item is a non-sufficient funds check. The bank will already know about this, so you will adjust the books. This would be a subtraction because it's a bad check. The money's not really there, so you have to deduct it back out of the balance. So you subtract $100 for a non-sufficient funds check. And then the last item says outstanding checks. The books already know about these. They've already been recorded on the books. They just haven't cleared the bank yet. So you have to adjust the bank balance. Checks will decrease the cash balance, so this is going to be a subtraction. You subtract $850 as outstanding checks. All right, that's everything. So now we just have to do the calculations. On the bank side, once you make this calculation, that's going to give you $9,455 as the adjusted bank balance. And then on the book side, once you do this calculation, that also gives you $9,455 as the adjusted book balance. The bank reconciliation of XYZ Company is provided below. Demonstrate the entries needed to update the cash account in the general ledger. Remember, we only make journal entries for adjustments that affect the book balance. Anything that is a bank adjustment, so as you can see here, deposits in transit, outstanding checks, those are already recorded on the books. So we do not make any journal entries for adjustments to the bank side, only to the book side. So here are two examples of entries that we would make for book adjustments. So the first one is note receivable collected by the bank. So this is going to be a book adjustment. This is going to be an increase in cash of $100 for the company. So since cash is increasing, you debit cash. This is a note receivable, so you credit notes receivable. And the amount is $100. The next item is bank service charges. This is going to be a subtraction, so cash will be decreasing. So that means we'll credit cash. You can debit an account called bank service charge. Sometimes it might be like bank fees, but we'll just do this for this example. And then you credit cash because the cash balance is decreasing. That amount is $60.